Right, good morning and happy Saturday, everyone. This is Trades and Gains. I'm your host, Max Pitts. And lately, this market has been called the world's most expensive game of chicken. And this is because in this week, Wall Street woke up to three uncomfortable truths that we're going to cover today. One, America doesn't control AI as much as it thinks it does. Two, you don't really own your car anymore. And three, China is about to sell Canadians a $15,000 electric vehicle while Detroit sells vibes and financing plans. And somehow all of this is bullish until it isn't. So let's go ahead and connect the dots. So let's start with Nvidia, our darling of the market so far. The stock that now moves markets more than the Fed does at this point. This week, suppliers halted production of Nvidia's H200 chips after Chinese customs blocked the shipments. No, not Washington, and not even our favorite orange-colored Dorito, and not even the White House. Chinese customs officials in Shenzhen. That's the part investors keep missing. This isn't coming from the US side of things. This is coming straight from Shenzhen and Chinese customs blocking these orders. Nvidia spent months lobbying Washington to approve the H200 for China. By the way, this is an older, watered-down AI chip meant to comply with US export rules. Washington went ahead and said yes, Wall Street cheered, and production ramped. Then Beijing said, cool story, but still no. And I'm 90% sure China already came out and said, like, we don't want your old garbage. So I'm not really shocked by this because they came out and said they didn't want the H200s because they would rather take that money and just build chips on their end. So I'm not really seeing why this is shocking. I've also informed you guys about this since the Nvidia was able to start shipping chips. The first thing China said is, we don't want those chips. We want the new stuff. And guess what? The factories went ahead and hit pause because of this. Suppliers, they're currently freezing their output, and Nvidia realized something terrifying. Well, approval from the US does not equal access to China. These chips aren't Legos after all. You can't just quote unquote repurpose them. Printed circuit boards for the H200 are chip specific, meaning if the shipment doesn't move, the inventory becomes a write-off at that point. That's not innovation, that's risk management roulette. And here's the bigger issue. China doesn't want Nvidia chips anymore, it wants leverage. Beijing is pushing domestic alternatives, like I just mentioned, mandating ratios of local chips and quietly letting black markets flourish for banned B200 and B300 processors. So what does this mean for the markets exactly? Well, Nvidia demand, it's still very real. AI capex is still exploding, but geopolitical friction is now a core risk factor. It's no longer a headline. This isn't an AI bubble. We're in an AI bottleneck at this point. And that bottleneck leads us somewhere unexpected. Your car. Because the same forces squeezing AI hardware are now reshaping how you buy, own, and use technology. Which brings us to Tesla. Tesla just quietly killed a dream. Starting February 14th, Valentine's Day, because, well, chivalry isn't the only thing that's dead, so is irony. Full self-driving is no longer something you buy. It's something you rent every month, forever. Remember when Elon Musk called FSD an quote-unquote appreciating asset? Turns out the only thing appreciating is recurring revenue. This isn't about driving. This is all about control. Subscriptions, they do three magical things for corporations. One, gives them predictable cash flow. They can know how much money is expected to come into the bank based on the amount of subscribers they have. Two, centralized data collection. You can do the math on that. Three, the ability to turn features off remotely, because that sounds safe and like you have free will. You may own the car, but guess what? Tesla owns the software, and the software owns you. This is the same logic behind streaming services you can't cancel, cloud storage you can't escape, and heated seats locked behind paywalls. The car used to represent freedom. Now it represents, well, terms and conditions. Kind of like that South Park episode where none of them read the terms and conditions and then ended up in the human centipede, basically. Yeah, that's what Tesla's turning into in a sense. And guess what? Wall Street, for some reason, loves it because in the AI economy, ownership is inefficient. Subscriptions, they just scale better at the end of the day. So let's zoom out. AI chips stalled at customs. Cars, they're turning into SaaS products. So what do these have in common? Well, the fight for who controls the future of hardware, data, and margins. And no one understands that better right now than China. Because while Tesla figures out how to charge you monthly for software, Chinese automakers are doing something radical. They're selling actual cars cheaply. Chinese EVs cost right now between $10,000 to $20,000. They're fully connected, loaded with software, stylish, and efficient. Meanwhile, the average US EV costs nearly $50,000, almost 2.5 times the price. Okay? And guess what? Canada just cracked the door open by cutting tariffs on Chinese EVs in exchange for farm trade concessions. The translation on this? Chinese EVs are now one border away from the US. Detroit, they're currently panicking, and I can tell you that because I live in Detroit. And guess what? Cars are just getting more and more expensive every month. Washington is warning, and consumers are, let's just say, curious. Yeah, because I know I'm curious. Leave a comment down below if you are as well. Because Chinese automakers didn't abandon small cars for giant trucks and SUVs. They built cars that people actually want. Wow. At prices people can afford and using vertically integrated supply chains. Oh my God. That's amazing. No wonder their cars are actually affordable. And here's the uncomfortable truth that nobody's going to want to confront. US automakers slowed EV investment just as China accelerated. Tesla already lost the global EV crown to BYD, and analysts now expect Chinese brands to control 30% of the global auto market by 2030. This isn't just about cars, by the way. These vehicles are data centers on wheels, software platforms, and AI endpoints, which explains the real fear. It's not competition. It's control of data, supply chains, and most importantly, global standards. So let's go ahead and connect the dots because you might not even know why any of this correlates. Nvidia, well, it's showing us that AI demand is real, but it's politically fragile. Tesla shows us ownership is being replaced by subscriptions. Chinese EVs show us the next industrial disruption won't be American-led at this point. Wall Street isn't betting on innovation anymore. It's betting on who controls infrastructure, who owns the customer relationship, and who gets recurring revenue. This isn't a bubble story, it's a power shift story. In markets, they're pricing in growth while underpricing friction. So the real question isn't, is AI real? It's who controls it when governments, corporations, and consumers all want different outcomes. Because in this market, the biggest risk isn't volatility, it's thinking the rules haven't changed. Hope you guys have a great morning. Hope you win some money betting on NFL later today. If you haven't, this video is powered by Investor Central Club. Make sure you use that code that we have for 20% off. It is going to be... Let me double check on the code for you guys real quick. It should be the Stacks Apex 20 for 20% off your first month. Make sure you like, comment, subscribe, leave your hottest take down below, and I'll see you guys in the next video. Again, make sure you go sign up, investorcentralclub.com, best options flow software on the market right now. See you guys in the next video. Hope you have a great rest of your day, or come hang out with me on stream. I'm currently over at Free Wi-Fi Radio. Later.